YouTube family. This is the Energy Coach back for another energy report on the finances and economics. Today is May the 2nd, 2024, Thursday. So it's a money day, money day. Let's get into it. We're going to start off on the charts with Solana. I was in a trade earlier on Jupiter. I got a little bit of something. I got back in a little while ago. Thinking it's gonna go down. Looked like it peaked out at 40, and it's about to be a little pullback probably before it continues. So, figured I'd grab a couple of little bit of change and see how it goes. Let's see what the market is looking like today. I think the market has been up, but it's still some red. Oh no, it's no red. It's green, 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 green. Let's see where Bitcoin is. Bitcoin is back to 59 from 57 yesterday and climbing. It's green all day. It's a green day. Besides H bar, ZBC, and Arbitron. Other than that, yeah, it's looking like a green money day. Money day. Man, yeah, something about these pullbacks is like Bitcoin takes a dive and then it just bounce back right repeatedly. Like it bounced right back. Let's see. Let's go to something else for the day. There's a couple of things I've seen today. Now, while Bitcoin is up, the economy isn't looking too good. So this is an article from Health Day, and it's on mental health, but it has to do with the economy and finances as well. So it's published today from Ernie Mundell, and it was saying economy election spur rise in anxiety among Americans in 2024. What's the key takeaways from this? Many Americans say they are more anxious this year than last. A new poll finds the election, the economy, and the great gun violence are heightening anxieties. That is very, very true. Gun violence and anxiety. There's so many people out here stressed about their finances and they're doing so much robbing and it's a lot of violence, man. But poverty creates that. A lot of poverty creates violence, man, because people don't have. Not to mention that so many people on drugs are they're having mental health breakdowns, which also ties to the spiritual aspects. But we're just going to focus on the economics for right now. Many Americans who get mental health treatment also worry that their access to affordable care might end. That's also serious. Yeah, I thought that was pretty interesting because it seems like a lot of a lot of people are just going through it, man. Like they are going through it serious, man. Like it's a lot of stuff. I don't know. The weight outside just seems like it's heavy. Hell, like even with this line, living in a world of constant news of global and local turmoil, some anxiety is naturally expected. So yeah, a lot of people are just, I don't know, they just going through it. It was another article I wanted to look up. I thought it was pretty interesting, and it ties to that. Okay, boom. This is from the Fortune. It says the the 34 trillion. That's crazy. 34 trillion U.S. debt is nearly as big as the economy, and there's still no plan to fix it. I don't think that it's they're going to fix it. Honestly, and I guess this was from the John Worden, the president and of Goldman Sachs. Um, yeah, you think that is definitely basically saying it's something serious that's looming, you know. And I guess it was from his summit, the Economic World Summit on April 18th. Let's see. Let's go to one more article. Boom. NBC. The Federal Reserve keeps interest rates at current levels as inflation holds its grip. So it's saying the Federal Reserve left interest rate unchanged at between 5.7, 5.25 and 5.5%, the highest rate in levels. I don't know. I think it's a lot more than that, but let's hear about this real quick. Hang on. Ski skirt.
We're following breaking news as well about the economy. The Federal Reserve just announced it will keep interest rates unchanged. It is the sixth time in a row America's central bank has decided not to change rates as it continues to try to combat inflation. NBC News business and data correspondent Brian Chung is here once again to break all of it down. Brian, I think we have this conversation every few weeks now. What does this mean for people at home?
Yeah, well, I mean, again, the news today is that the Federal Reserve did not do anything to interest rates. They didn't raise them, they didn't cut them, they just kept them the same, which means that the relatively high interest rates that you're seeing on your credit cards, on your auto loans, on your mortgage rates are going to remain elevated in the absence of the Federal Reserve cutting interest rates. And the big reason for all of this is because, well, inflation isn't quite yet at where policymakers want it to be. We're still feeling that pinch at the store on a daily basis. So the Federal Reserve noting in its policy statement released just a few minutes ago that, quote, inflation has eased over the past year, but remains elevated. Translation, mission not yet accomplished. That's the reason why they haven't yet cut interest rates, Kate.
So mission not accomplished. Is what they're doing, is what the Federal Reserve doing against inflation working? Do we know?
Well, by all measures, it has already had an effect because when you consider the yearly rate of inflation, again, how much have prices risen on a yearly basis, that rate was somewhere closer to 9% in the summer of 2022. The most recent measure is about 3.5%. So the Federal Reserve during that period of time was raising interest rates to try to take this economy down a few notches by deliberately making it more expensive to consume and also to invest. So the Federal Reserve is saying, all right, that's great. But again, the Fed's target is 2%. 3% is not yet there. That last mile is what they're concerned about.
Yeah, and the next time the Fed has a chance to lower rates, I think will be in September, right? So right in the, is that right, or is it every
well,
month?
they have a few meetings between now and September, but market pricing expects that they will likely not cut interest rates until maybe around the fall.
I see. Okay, so, what I wanted to ask is that's right in the middle of the presidential race if we're in September. Does the election factor in at all with the Fed?
Well, the Federal Reserve is an independent agency, and even though its chair is appointed by the president, they are not beholden to whatever the president wants on interest rates. But yes, certainly when you take a look at the timing of that, yeah, that could be close to the election, but Federal Reserve Chairman Jay Powell, who, again, was appointed by Donald Trump, not even by President Biden to head this central bank, is likely to say we are just looking at the timing and looking at the data. That could be when that interest rate cut would happen. But I want to emphasize, Kate, anything could change. It all depends on the data. When we came into 2024, expectation was for that rate cut maybe to happen in June. It really depends on the data.
Right, and they do look at it every month. So we'll be back 4 weeks from now, Brian, talking about this again. Thank you.
I thought that was very interesting because it's like they're trying to get control of the economy and they're trying to get ahead of what this is, but man, it's like really nothing that can be done about this. Like the dollar done lost 99% of its purchasing power and it's on life reserve. The economy is in shambles. The companies are closing down. People have lost their jobs and nobody really has savings like that. The credit card debt is beyond, you feel me? So it's a lot that's going on. But what can you do? Man, plan. Not even just plan. Take action, Get into something and find something that you can do. Find a way to hedge your money. Learn to trade. Start a business, online. Invest in hard assets like metal, gold. Try to get some land. Work on your skills. It's tribe up. There's so many things that can be done. Like, don't just focus on the what's going wrong. Focus on the what can be done, But yeah, that's the report for today. I hope you guys liked it. Like, comment, and subscribe, and I will catch you guys on the next one.